Welcome, everyone. To today's deep dive, we're going to be looking at Ethiopia's economy.
Yeah, I think it's a really interesting time right now for Ethiopia.
It is. We have so many interesting sources to dig into today. We have news articles, expert opinions, financial reports, and even a little peek into how new traffic laws are affecting everyday people in Addis.
I think that's going to be really interesting to see how these different threads weave together.
Yeah, exactly. So we're going to start with an article that really caught my eye. It's called Nib Bank in Limbo. And this is about a brand new commercial bank that's been trying to launch in Ethiopia.
Ah, a new bank. Always an exciting prospect. What's going on with G's?
Well, there was so much hype around this. It was supposed to be this big deal.
Yeah, I can imagine.
But the timing really could not have been worse. The civil war that started back in 2020 really threw a wrench into their plans.
Oh, of course.
They've been trying to meet the National Bank of Ethiopia's deadlines ever since. And then in 2021, the National Bank actually raised the minimum capital requirement for commercial banks.
Yeah.
So even though existing banks have until 2026 to meet this new requirement,
wow,
G's Bank does not.
Yeah.
They need to raise $500 million birr in paid-up capital just to start operations. And they have 6 months.
That is, that's a tall order for any business, let alone a brand new bank.
Yeah, it's a huge ask.
Ah.
Especially with everything else going on. And on top of that all, there are some serious divisions within the bank's founding committee.
Oh, no.
Yeah, they're not even sure what direction they want to take the bank in.
So internal conflict as well as this very difficult external environment. How are they navigating this?
Well, they have 3 options that they're considering. One is they could try and raise that capital somehow.
Which is a lot.
A lot of money,
Yeah.
Another option is they could invest the equity that they have now into an existing bank.
Okay.
Or they could just transform into a whole different kind of financial institution.
So some tough choices ahead for them.
Very tough choices. Mm-hmm. And the shareholders are understandably feeling the pressure. A lot of them have been waiting years to see a return on their investment. Mm-hmm. And it's not looking good right now. There have even been attempts to mediate this situation involving civil society groups and religious leaders, but so far, those deep divisions remain.
It's a very tense situation for sure. It's a shame to see such promising venture kind of struggling like this.
Yeah, it really is. So speaking of challenges, let's move on to our next source, which focuses on another industry that's facing some difficulties, the leather industry.
The leather industry.
Yes. So this article is titled, Leather Exports Face Price Floors. And it's all about the government's attempts to increase export revenue by setting minimum prices for leather exports.
Price controls. Interesting. What's the thinking behind that?
Well, the Ministry of Industry says that this is absolutely essential to reversing the leather industry's downward trend.
Okay.
So export volumes have actually increased, but revenue has not. Mm-hmm. And they say that this is because of under-invoicing.
Right, where exporters are basically under-reporting the value of their goods to avoid taxes.
Exactly.
Happens all the time.
Yeah. And they're trying to combat this by setting these minimum prices. But of course, the immediate impact of this has been incredibly disruptive for exporters.
Yeah, I can imagine.
Many of them had contracts already in place at prices lower than these new minimums.
They're stuck.
They're in a really tough spot.
Yeah.
And they're worried about damaging their reputations and losing business if they break these contracts.
Yeah, it seems like there wasn't much of a transition period or any kind of heads up for these exporters.
Yeah, not really. They feel completely blindsided by this. And they also argue that the government should have considered the different grades of leather when setting these minimum prices.
Right, because obviously not all leather is created equal.
Exactly. Some is higher quality than others.
So a bit of a one-size-fits-all approach then.
Yeah. And to complicate matters even more, the article quotes a veteran exporter who actually blames the influx of foreign investment for the decline in quality and revenue within the industry.
Interesting take.
Yeah. He says that there's been too much focus on quantity over quality, and that's ultimately hurt the industry.
It makes you think about the balance between encouraging investment and maintaining quality standards.
Yeah, it's a tough balance to strike. And it's not always clear what the best approach is.
Definitely. So we've seen a new bank struggling to get off the ground and now a major export industry facing these new challenges. What's up next?
Let's move on to a story that offers a slightly more optimistic perspective. It's about the appointment of Tsigereda Tesfaye as the new president of Hibret Bank.
The change at the top, always interesting. What's notable about this new president?
Well, Tsigereda's appointment is historic. She's only the 3rd woman to ever lead a bank in Ethiopia.
Wow, that's fantastic. A real milestone.
It is, and she has an incredible track record. 3 decades of experience in banking. She's clearly committed to Hibret Bank, and she's known for her expertise in risk management.
Risk management is crucial. In these uncertain times, what kind of challenges is she facing in her new role?
Well, despite a really strong financial performance in the previous year, Hibret Bank has recently experienced some losses from foreign currency dealings.
Yes. The volatility of the global market.
It's definitely a factor.
Yeah.
And, of course, she's also tasked with adapting to the rapidly changing technological landscape in the financial sector.
Keeping up with the times.
Exactly.
Yeah.
But she seems up for the challenge. The article outlines her vision for the bank, which focuses on digital expansion and building on their existing strengths.
So continuing that upward trajectory.
That's the goal. And they are in a good position. The bank reported really robust growth last year. Profits are up, revenue is up, assets are up.
So a solid foundation to build on still. It's important to acknowledge the fact that women are still significantly underrepresented in leadership roles within the banking industry.
You're absolutely right. Her appointment is a positive step, but there's still so much more work to be done.
A reminder that progress is rarely a straight line.
It's true. But it is encouraging to see individuals like Tsigereda breaking barriers and paving the way for others to follow. Now, for something completely different, our next source examines the Ethiopia-Djibouti transport corridor and the serious issues that are plaguing it.
The Ethiopia-Djibouti corridor, isn't that a crucial trade route?
It's absolutely vital. The vast majority of Ethiopia's imports come through the ports in Djibouti, but the infrastructure is in a really bad state.
Oh no. What's going on?
The road between Dikil and Galafi is particularly dangerous.
Mm-hmm.
Right now, there's a lot of damage from flooding. And the article even describes the conditions as life-threatening for truck drivers.
That's concerning. What's being done to address this?
Well, unfortunately, it seems like there's more finger-pointing than problem-solving happening right now.
The blame game.
Yeah. The Djiboutian authorities are accusing Ethiopian trucks of overloading and causing the damage, while the Ethiopian authorities deny those claims and blame it on poor road maintenance.
A classic stalemate. Then it's the truck drivers who are caught in the middle.
Exactly. They're facing these dangerous conditions and then all sorts of bureaucratic delays at the border as well.
Yeah, I imagine there's a lot of back and forth.
There is. The article points out that the customs working hours don't even match up between the two countries,
Adding to the frustration.
and then there's this trilateral agreement between Ethiopia, Djibouti, and South Sudan that's been stalled.
And what would this agreement do?
Well, if it were finalized, it could really benefit South Sudan's trade.
Okay, so a lot of potential benefits, but right now it's just stuck in limbo.
It is. And to make matters even worse, Djibouti's ranking in the Container Port Performance Index has actually been declining.
Not a good sign. What are the factors contributing to that?
It seems like a combination of things.
Yeah.
Geopolitical instability, port congestion, and rising transportation costs, all playing a role.
It's a complex situation for sure. The corridor is so important for Ethiopia's trade, but this lack of cooperation and investment is really creating a risky situation.
Yeah. It's impacting everyone who depends on that route. And it really underscores just how important well-maintained infrastructure is for economic growth, but also for regional cooperation and for the safety of the people who rely on it. Now for our next source, let's go back to the financial world and look at the challenges facing another bank, Nib International Bank, or NIB.
Another bank facing headwinds. What's the story there?
This article paints a pretty bleak picture of their last fiscal year. Their total assets have decreased, their deposit base has contracted, and their profitability has taken a significant hit.
Not good. Not good at all. What's driving this decline?
Well, one of the big factors is their heavy reliance on external borrowings, which of course has driven up their costs and put a strain on their liquidity.
Borrowing to stay afloat. Never a sustainable strategy.
No, it's not. And it seems to be masking some deeper structural issues within the bank.
So a band-aid solution, not addressing the root cause.
Exactly. And what about the shareholders? Well, to put it mildly, they're not happy.
I can imagine.
They found out that they won't be receiving dividends this year due to the bank's poor performance.
Ouch. A suspended dividend is never a good sign.
Definitely not. It erodes investor confidence and raises questions about the bank's long-term stability.
So what are they doing to try and turn things around?
The article details some of their efforts to stabilize. They're trying to attract long-term deposits, streamline their credit portfolio to reduce risk, and leverage technology to become more efficient.
Sounds like they're trying to hit all the right notes.
They are, but it's an uphill battle given the economic climate and the competitive nature of the banking sector. Rebuilding trust with depositors and investors is going to be crucial for their recovery.
Absolutely. Trust is paramount in finance. Without it, banks really struggle to operate effectively. Now let's step out of the world of finance for a moment and take a look at what's happening on the streets of Addis Ababa.
Sounds good. Our next source offers a glimpse into how recently implemented traffic regulations are impacting daily life in the city.
Traffic regulations. Always a sensitive topic. They tend to affect everyone.
They do. And this article shares personal stories of drivers who are struggling to adapt to these new rules. The fines are really steep, and a lot of drivers are finding it impossible to avoid them, especially with limited parking options and the ever-increasing costs of fuel and vehicle maintenance.
So, a real financial burden then?
It is. The article tells the story of Binyam, who earns just 7,000 birr a month and is supporting a family.
And now he has these added expenses.
He's already had to borrow money just to pay his fines.
Wow, that's tough.
It's getting to the point where he's considering quitting his job altogether because driving is becoming too expensive.
That's really concerning.
It is. And then there's Gebra, a taxi driver who's now forced to work the night shift to avoid the traffic enforcement during the day.
I see. So it's disrupting people's lives in a very real way.
Yeah, and it's not just the fines themselves. There's a lot more enforcement happening now with more traffic officers on the streets, and it's created this atmosphere of fear and anxiety among drivers.
It sounds like a pretty intense situation. So what exactly are these new regulations?
Well, they've implemented this new 3-tier penalty system for traffic violations, with fines ranging from 500 birr to 1,500 birr or more. And there's a point-based driver suspension system now as well.
So a much stricter approach than before?
Much stricter. And drivers are being penalized for all sorts of things, from smoking while driving to exceeding passenger limits.
I see. So it's a pretty wide range of offenses.
It is.
Yeah.
And the Taxi Drivers Association is particularly concerned. They argue that these regulations are a serious threat to their livelihoods.
Yeah, I can imagine. They're on the roads all day, every day.
Exactly. And they feel like they're being unfairly targeted, especially given the lack of adequate parking spaces in the city.
Right, because if you can't find a legal place to park, what are you supposed to do?
It's a valid point. And it seems like there needs to be a bit more balance between enforcing these traffic laws and considering the economic realities of the people who are most affected by them.
Absolutely. It's about finding that sweet spot between ensuring safety and allowing people to earn a living.
Exactly. Now let's shift gears a bit and zoom out to look at Ethiopia's economic vulnerabilities more broadly.
Okay. The big picture.
Our next source is an editorial titled, Ambition and Vulnerability in Ethiopia's Economy. And it offers a really thought-provoking analysis of the challenges facing the country.
I'm curious to hear their take. What are some of the key points they raise?
Well, one of the things they focus on is the struggle to manage the birr's value against other major currencies. They talk about the government's recent decision to liberalize the exchange rate system after years of maintaining a fixed rate.
Yes. The liberalization debate.
And while initially it seemed like a positive step, the gap between the official exchange rate and the parallel market rate has actually widened.
Creating that disparity again.
Yeah, which raises concerns about the long-term sustainability of this reform.
Yeah, I can see why that would be a worry. A stable and predictable exchange rate is so important for attracting foreign investment.
Exactly. And this volatility also has implications for Ethiopia's external debt, which is quite substantial, and a lot of it's denominated in U.S. dollars.
Right, so every time the birr depreciates the cost of servicing, that debt goes up.
Exactly. Creating a really difficult cycle to break. The editorial also points to the growing trade deficit as another area of concern.
Ethiopia imports more than it exports?
Exactly, which puts further strain on the country's foreign currency reserves.
It's a common challenge for developing economies.
It is. And it highlights the need for diversification, moving away from reliance on just a few key exports and developing a more robust manufacturing and agro-processing sector.
So building a more resilient and multifaceted economy.
Exactly. And the editorial does acknowledge some of the government's efforts to control inflation and defend the birr, like imposing high interest rates and large reserve requirements on commercial banks.
Those are pretty standard monetary policy tools.
They are. But of course they also come with downsides.
Such as?
Well, they make it more expensive for businesses to borrow money, which can stifle economic growth.
Right. So it's a delicate balancing act.
It really is. And it highlights the difficult trade-offs policymakers face when managing an economy with multiple challenges.
It certainly does. This editorial really does offer a valuable overview of Ethiopia's economic landscape, showcasing both the vulnerabilities and the potential for growth. Addressing these structural issues is going to require a multifaceted approach and a long-term vision.
I completely agree. And I think that's a good place to pause for now. We've covered a lot of ground today, from individual stories of hardship to these broader analyses of the Ethiopian economy. It's been a real pleasure exploring these topics with you.
Likewise, I've really enjoyed our conversation.
Farewell. Until next time.